Is the worst in terms of a potential trade war already priced in?
Well, I think a couple things. One is we've gotten used to these trade headlines, Morgan, and whenever you get a trade headline, the market goes down. It's been a great time to buy, just on a timing basis. And I think investors are starting to herald that. I think the big thing is the fantastic fundamentals. As long as the economic data stays good as it's been, the Teflon around President Trump's trade war, the Teflon around Powell's tightening is going to remain in place, and the market is going to feel impervious. But if that fantastic fundamentals start to fade, the economy slows somewhat, then I think the Teflon comes off the president and the Fed, and the investment markets might start to struggle more in general.
Mark, what do you think? Do you agree with that?
Well, I think, Morgan, if you look back to 1985, the Plaza Accords, the Thai baht debacle in 97, Russian ruble in 98, ended up, 20 years ago, long-term capital blowing up. You've got a tariffs impact on Monday, a Fed on Wednesday, and you've got a price for perfection equity and debt market. So, you move the Chinese currency or the dollar up, and we've already killed off Argentina and Turkey. Let's see what happens elsewhere. So I want to own equity that, as Buffett says, when the tide goes out.
Oh, dear. Oh, my.
I think we just lost our connection right
He
there.
was just getting to the good stuff, too. Yeah. He doesn't like the stock market, right? Jim, you said this often becomes a buying opportunity, but a guy like Mark Travis is finding it difficult to find value in this market. If you throw everything else out, the trade war and everything else, the Fed raising rates, this 10-year bull market is priced to perfection, as he put it. What do you think?
I don't disagree with that, Bill. I really think the odds are that it's going to be a struggle for the stock market, either continuing to mark time or hitting an air pocket maybe. And I'd be much more aggressive if we had a 10 or 15% correction and still thought a recession was a ways off. But right now, I don't disagree with Mark. I think valuations are extraordinarily high. And you got the Fed working hard to kill off the recovery as well as the market with tightening. You got the president working to slow down global growth. And Wall Street's depending on global sales to keep those steroid-induced earnings gains we've been experiencing going. And if any of that slows down, like I said, if fantastic fundamentals slow, which I think they're gonna, then I think suddenly this whole thing looks a lot different. There's no way the president can continue a trade war if the U.S. growth slows back into the twos somewhere. I think he'd have to stop.